Good morning, everyone, and welcome to my daily plan here on Cyber Monday. And very quick review of last week. We'll get back around to that maybe. Last week, as you probably know, was just a straight up week. Volatility had gotten out of whack. A lot of last week's buying was mechanical as volatility came in, put call ratio was at extremes. So last week was a lot of it was mechanical. Additionally, leverage ETFs, when we go up, they have to rebalance and buy. And so pretty much the dynamics of the week before and the weakness just happened in reverse last week. And so now here we are, kind of near an equilibrium point, I would say. And probably TA wise as well, kind of just structurally. Okay. Now, some of you may notice this little whale thing. Actually, I can make the whale bigger because we got a big ass whale today. So this is the IC whale, called by others Captain Condor, but I saw him first, and so I've been calling him the IC whale for 3 or 4 years. And others have been calling him Captain Condor for less than a year, so I claim my right to name him. Kind of like when scientists argue about like naming a botanical species or something. Anyway, I digress. So the IC whale, who is actually has a service which charges about $3,000 a year for the privilege of putting on his very mechanical, very vanilla trades. And he uses a martingale strategy where basically pretty much he tweaks it a little bit. If he loses, he doubles up in size until he goes broke or wins. So far, he hasn't gone broke yet. He's come close a few times. One time this year within 80 cents or 0.8 S&P points of going broke. But his subscribers going broke. I'm sure he doesn't go broke, based on the way he outlines it. Anyway, be that as it may, I digress. Like I said, he lost 4 times last week, and so now he's here for the 5th time this week with 40,000-ish contracts of an iron condor sold up here at 68.75 on top. See that? 68.75, 85. Here's his top, and here's his bottom, 68.10. Notice that we're right at near below his level. So the question for today, and not just for the survival of the whale and the good of the species, but for us as traders, is what happens around 6,800. Now let me switch gears and let's look at the position breakdown by strike a little more granularly. And what do you see? Not much other than this. 40,000 contracts here, up here. Well, that's a bridge too far by now, 68.75. So this is showing it from the market maker's point of view. So market makers are long, customer short, 68.10. And here's the other side of the trade, 68.05. And some people do 10 wide in his service. So yeah, 6,800 a few. So Gamma Dynamics 101. If we're below 60, if we're below a market maker long strike, as we go up, they sell. But capital B-U-T-T, but as we go down, they buy. Some of you might have caught that joke, B-U-T-T. As they go down, they buy. And so these levels become sticky, mean reverting sticky, especially later in the day. The later in the day, the closer we are, the stickier they become. Down below, in this area, below 6,800, nice round number, always institutional positions there, out in time. There's really nothing from a gamma point of view, don't torture the data, until 6750. A little bit of a cluster in here. And then below that, 67 1/4. You know, you're always going to get stuff at the quarter strikes and round numbers. And below here, 6,700. Well, that's should hold. Now, the expected move for today, when I looked before, was 35-ish. When we were at 68, when we were roughly here, 68.05, 68.10. So let's call it 35, gets us up to the 68.40, 50, maybe Friday's close range if we make the expected move on top. And the expected move on the bottom from here would have given us around 68, 67.75, 67.80, somewhere in here. And it makes sense that should we go down there, absent a big reason, so to speak, you know, a headline of VIX craziness, whatever, then we would expect, I would expect, you can expect what you want. I expect a V reversal or pull back, a suck back toward this area, 6,800, 6,810. So, and if we're above here later in the day, say if we're messing around 6820-ish, which was, good morning, 6820-ish, which was where we opened on Friday, reference point. If we're messing around here later in the day, we could easily get pulled back towards, not to the penny, towards 6810, toward this area. So this area ends up being a potential battle zone, sticky area from below, from above. If by some miracle we get up here to 6850, then suddenly there's a potential to get pulled to here. Danny, I DM'd you on Substack. Let's make sure we finish our discussion. I'm not sure where we were at. Okay, so let's just kind of get that taken care of on the admin side, which is not my strong suit. And so that's really it. We have a rash of data today-ish. We have numbers at, I'm not even sure what time I would have to check my notes. I'm sure Ben Andre will pull that up or not have it handy, because he does it too. So we have some numbers in the morning, a cluster of them, ISM and a few other things. Oh, by the way, China PPI, apparently somebody gives a crap about it, was 49 point something. They were expecting 50 point something. So the Chinese economy is contracting, not expanding, if we believe the numbers. And so Trump can say that the tariffs are working. The macro bureaus could say, but then the tailwind for the economy of China buying crap is going to be a headwind, et cetera, et cetera. My guess is that's why we kind of got that flush a little bit in the overnight session. And we'll let the macro algo robots fight it out. And that's kind of where it is for me. So let me go back. And for those of you that are subscribers, we're kind of redoing the Discord, kind of trying to streamline it and kind of get it more user friendly. And thank you all for those who took advantage of the great Black Friday sales. And if everything's not squared away 100%, that's my shortcoming as an admin. I think I've got everybody situated, but in case I haven't, DM me, bombard me, bug me, remind me, and I'll make sure I get it done. Okay, you're up, young man.
Can you guys hear me? Good morning.
Good morning.
Let me see if this works. I'm trying to
Let me get ES up.
I'm going to try and share my screen today, see if that
Oh, good. Yay. We talked about that. Yeah.
works okay.
Let me know. Oh, there you are. Okay. So I have to get myself off. Remove. Add. Go ahead.
Right on, guys. So the first two things that I'm looking for here are going to be the 68, 20, 21 area. That should be the first level you're looking to break if you're long. If we do hold above that, I'm targeting 68.47 and then 68.65 up here. That's kind of the lottery push if we can get there. Okay. If we can't hold 68.20, I foresee kind of coming back down to the 6,800 area. Now, I could see kind of some pinball going in between these two levels today. But if we break below 68.02, I am looking at, let me tell you, down here, this 95 area. And then after that, 87. And then lastly, if we can get there, 70. So between here, this is kind of contention.
Wow, look at how good he is with all these drawings and stuff. Very impressive.
So this is kind of the area that I'm looking to get out of. If we can break 68.21, I think we have some fun to the upside. I don't think the fun to the downside is as drastic, but still some good money to be made.
Okay, so now, and maybe we'll make sure to do this next time if we put the TV string in there and see how that lines up with this. But I already know where we are. And let's remember that 68.10-ish SPX is 68.20-ish ES. So that's the top of your, is that the top of your box?
Yeah, it is. Yep.
Okay, so that's where the IC whale is. That's where we should stick. From a gamma point of view, that's where we should mean revert towards, from below or from above. From above too. So if we manage to get up 10, 20 points, there's a good chance that we mean revert back down toward it.
Yeah, I could see that. And if we don't hold that 20 level that you're talking about, I really would be trying to get 20 points down to 6,800. I think that would be a very easy trade.
Yeah, and that would make sense from the from where the gamma and the expected move levels are. And it wouldn't shock me if we didn't overshoot to the downside and had a V pull right back up toward 6,800 SPX, so we'll call it 68.10 ES, right back into your box. Undercut to the bottom of the box, maybe overshoot a little bit, then get sucked right back into the box.
And where are you expecting that bounce? Around the 70 or higher?
I would expect that bounce 85, 90, 70 would be an extreme. I don't think we would get there. I think that your next lineup might be where we would get the bounce.
Okay. Yeah, I agreed.
Yeah. So We have extreme.
I'd like to see it at 95. If we can come down to 95 reverse, I think that would be a really fun trade. But like you said, I do think that 87 might be more in play.
I mean, that's kind of where the bottom of the expected move is. And, that 85-ish, 90-ish area. And so that's just another data point that pulls us toward there where we would expect a reaction. And the default reaction would be possibly a V or a nice, I'd rather not have a V actually. I'd rather have a nice systematic, bars up in a row, closing, one bar closing green, next bar opening green kind of march rather than that crazy, V, but I'll take what I can get, I don't think the market particularly cares for what I would rather have. And that's it. It's actually kind of a simple day. The main risk, and what time do you have the all those silly numbers, the ISM and the LMNOP and all that stuff?
What time? What do you mean?
Yeah, we have numbers like all morning.
Oh, 9:45?
Oh, let me dig it up. I have it in my
If you're talking about the PMI, we have that at 9:45. And then we have ISM at 10. I don't know if that's what you're asking.
Do we have one more? Okay, we have PMI at 9:45, ISM at 10, and also construction spending at 10. Okay, so by 10, the algos will get to fight it out a little bit. And maybe they'll decide these numbers are great, they're cutting rates, and the economy is great. Maybe they'll decide these numbers suck and the economy sucks. And whatever the algos will decide until the next set of numbers and the next set of algo fights. But IV, which is now, let's get over here for a second. Let me find it. VIX, is this it? No, is this it? Yeah, here we go. So VIX popped back up to 18. And as I said in my note, no shock. Friday into the close. Just default that, nothing else. IV, VIX strike vol, it doesn't matter what you want, what particular flavor you look at, is gonna goes down. Always mechanical. That's just the nature of the universe. And it pops up on Monday morning. So, I mean, selling those puts the way the IC Whale did, not taking that into account, is just very unnuanced. Let me put it that way. Okay, so we have VIX at 18. So now we have kind of that old VIX range, and you don't do TA on VIX, but there's also customers long calls and long puts around this area that makes that 18 area meaningful, not from a TA level, so, from a TA point of view, because you can't do, because VIX is math, not TA. But from a hedging mathematical point of view. And okay, now here we have a little kerfluffle. We have the VIX, the VIX cash index, and the VIX futures roughly the same. The VIX futures only 0.6, whatever, higher than the VX, which this is a calculation. This is a bet on where VIX is going to actually close. So this is telling me that this is over calculated. This is bad math compared to this prediction. This should be a 2-point difference. So this should be more, or 1.5. This should be more in the 17-ish, 17.5 range based on this number. Unless the futures are dead ass wrong and the calculations, the math and the fear math is right, which I'm going to go with the futures. And here's the 3-month vol. So now look at this. Look at this. 3-month volatility is 19, is whatever. It's only a point higher than 1 month. That's wrong. This is too elevated. This whole complex, and we were at something like this last, I think it's called the vol 2 for this. There's a name for this. And there's ratios for this. But screw the ratios. This is kind of extreme again. Not as extreme as it was last time, but it's kind of extreme again. We have the FOMC next week. So the vol space may be a little funky. I don't know. I still think Santa Claus is coming to town. He might be feeding his goats, his reindeers, revving the engines for after the FOMC, or he might decide to leave early. I'm not sure, but I'm still targeting 7,000 year end with a high degree of probability or higher. I'm not equivocating. Of course, it's if then, but that's what I'm targeting. Write it down. You heard it here. If I'm wrong, you can reframe. You can tell me I'm wrong. Oh, thank you. Yeah, and I'm going to put, I'm not sure if I put that interview on X. I did an interview. It's on YouTube. I'm trying to figure out how to get it on my YouTube channel, but I will figure out how. I need a millennial to teach me, or a Gen Z, or whatever Gen it is.
I got you, Doc.
Oh, I have one handy right here
Yeah.
to teach me how to do that. And I also did a live Q&A, which was really fun, with the option seller. She's got a Substack. Yes, we have products. No, we're not partners. Yes, she does good work. We respect each other, and it was fun doing with her. I highly recommend her stuff. She highly recommends mine. And subscribe to both. What can I say? There's some overlap in what we do, but there's a lot of difference. She does a lot of things that I don't do, and I do things she doesn't do, and vice versa. Maybe we'll figure out some joint things in the future. It was great doing it. And I have some more scalping stuff coming in. We always had it to some degree, but we're kind of unrolling that a little bit more in V3 or whatever V we're in. So let's keep an eye open for that. And going back to here, is this an old one? Yeah, it's an old one. See, here's where the whale used to be. See, here we are. Right? I tend to leave tabs open forever because I'm afraid I'm never going to be able to find anything again. There we are. I'll probably get rid of that one at some point when I gain the courage. And so here we are. And, we can easily get stuck under here, 6,800-ish. And at the end of the day, we get stuck to it, but this ends up locking the door. So it's really important from a bullish kind of point of view to at least get sucked to the the whale. I don't wish him ill, but if we close at 6,800 or 6,805 and he comes back tomorrow at 75,000 contracts, so much the better. I hope it doesn't happen to him, but what happens. That's out of my control. But from a charting and from a psychological point of view, from a gamma point of view, going forward, it's important that we don't lose this by too much. 68, getting sucked right in here would be a good thing. And let me go back to option depth for a second. And let's just take a look at depth view, which is just another way of displaying the same data. But here I can see positioning out like as far as I want, whatever I put in the menu. And just to get our road mappy kind of thing. So we see all these sold calls over here, market maker long, hard to get over, and these longs, the red is market maker short, customer long. These up here are the other side of this trade. We do have a fair amount of long calls. Somebody bought something, 3,000, almost 4,000 calls at 68.50 and some at 68.45. So that is a target, but we have to fight our way through all this. Just think of green as kind of resistancy or sticky-ish. So we'd have to fight our way through this, which is 68.35, which is not a great, I wouldn't want to put my money on that, but we have to see after the ISM all the numbers. Below us, 68.10, we have a little notch at 67.90, which would be 6,800-ish ES, a little bit of support. Then we basically have nothing, don't torture the data, until all the way down here at 67.50, we have a little something. 67.25, and then below down here 6,700. Everybody sold puts down there, and they said we ain't going there, and I agree, we ain't. Next couple of days, let's just look at the landscape. 6,900s, we have buyers. 6,900s. Is in somebody's target for Friday. 68.80. People seem to like it for some reason. 68.50 is, I would say, close to guaranteed. And I know there's no guarantees in this racket. And if we should break down, if the numbers are bad or whatever, it looks like there's kind of supporty stuff down the 67.50 round number, 6,700 round number. That would be your first line of defense, keeping in mind that we have the 20 DMA and the 50 DMA. Last I looked, kind of converging around 68.20. Let's take a look. I think this is wrong. I think this has to be recalculated. I think these MAs should be a little lower, but I could be wrong. But either way, we have MAs converging in the 68.40, 25 area in here. And why I care about the MAs, there's a few reasons, but the main reason is because the algos care about them. The CTAs, the trend following, will lighten up and adjust their allocation based on the 20 and 50 DMAs are important lines for short-term commodity trend advisors. Those are hedge funds that lighten or increase their allocation based on where we are in reference to moving average-ish, oversimplified. And just so that folks remember, at 68.20, let's go say, or 60 or 67.20, whatever, they're gonna sell. That doesn't mean they're short. Their typical allocation model might be 120% long, leverage long, and now they're only at 85% long. So they allocate lower, but they're still allocated long. So just understand that nuance. Same with volatility control funds, they use different things. Just a little nuance to keep in mind. Okay, it's 9 o'clock. Let's take a look at option structures real quick. Okay, so let's all right, so I did my little thing here, and 67.40 was what my version of the IC whale kind of thing is, but not really. And that looks, I'm not worried about it. It's red. I would probably add down here. But what I want to look at first, I'm just curious. So the IC whale sold this and sold, where is he? Let's make this a lot. And sold this. So it's 250. If you wanted to buy it, it would be probably a little more. So he got about $1.70 for it. So that's what he's down. He's down, whatever, 70 cents on the spread. He tends to not buy back. He's bought back once or twice in the history of the whale. So that's where he's at. That's where he's at. Obviously, it's just puts that are taking the pain. And so he needs to get back over here. What would I do if I were to put a trade on right now? And let's start with the 5 wide, something conservative-ish.
Number 2.
Anywhere down here below the 68.25, if you're okay with a very small credit. 67.35 even, I think these are fine. On top is tricky, but on top, if we go with whale strikes, 55 cents, that's okay. I would put this in for 60 cents right here, right now. Real money, real dollars. Let's see what happens. My typical trade is 15, 20 wide, whatever. Once in blue moon 10, once in blue moon 25. But for a 10 wide, let's see what this looks like. That's not bad, 65 cents, except I'm already long over there. I don't want to like screw up the buy to closes. And so I could do that in a different account. So let's play that game in a different account. Let's go 35, 25. And let's go 75, 85, not really enough juice. I'll be a little bolder, I'll do that. I'll try and see if I can squeeze a couple extra pennies out of that. So selling up near the IC whale, you could probably go further away or closer in. I like to start up closer. How does convexity have to sink to put on a butterfly? What I like to see, that's a good question, good nuanced question. I like to have the convexity where we're being pulled toward, where the customers are long market makers are short, to have that be where my long strike is, my first long strike, ideally. Sometimes if I can't get that, then I'm going to use the market maker long as my base and sell right above the convexity, saying that we're going to go up there, we're going to stall, and that tends to be where we turn around. So there's two basic setups. So now let's switch to, that's a very good question. And some people just like to sell the short, yeah, the market maker long. And so let's look at this setup right here. Okay, so we're over here right now. So we have convexity to the upside if we can get through this. Not great. So let's just say we have convexity down here towards 67.50, but nothing that's strong. So we don't have a great setup for that kind of a trade. We have a better setup for selling the mids. So let's look at the IC whale here. He gives us something nice. We have potential convexity up from below over here. Here we just have stalling up here. That's just not great. Let me see what I can cobble together. And so where are we now? Let me see where we are on the chart. So we're at 6,800. Yeah, this is kind of sucky. Let's look at a put fly first, because that's sort of the easiest to think about. That might make sense. I'm gonna put it in cheap for now. I'm not sure if I love it or not. I think really our best play is just I really think our best play is kind of playing the mean reversion back into him, something like that. Or if we want to say, okay, he's going to get lucky, so somewhere in here. If they're the same price, I'd rather go something like this. I don't see a great one for right now. Put it in 65 cents, see if I get it. I would look to play either of these on the drop or the pop. If not, we just try to sell the sticky strike in the middle, because that's what we know we have the best. And sell the 68.10 from whatever direction you want, as wide or as narrow as you want. So just for fun, one more time. 68.10 is where we're supposed to stall. That for 40 cents, 35 cents. That could be fine too, and you can build around it. Yes, yes. That's where we should stall and get pulled to on a day like today. So absent anything else, that's what we want to figure out how to sell. Then we want a long strike, whether it's a long put or a long call, depending from our direction, to be in the money. We want our long to be in the money. We want to sell where it's not going to go or where it's going to reverse. We don't mind if it goes there and then it kind of stalls and pulls back in. That's fine too. And I'm not holding these necessarily to the end of the day. If I pay 85 cents and I'm going to get out at $1.10, I'm taking the money. I typically try to trade both sides and get out of both sides. One tends to be more profitable and the better play. The other one, I tend to just be able to get out half decent. Sometimes we get a nice day where we go up 10, 20, 30 points and down 10, 20, 30 points, and you can make decent money on both. I mean, right now it looks like we're going to get above the IC whale strike. Like stuck right there. And so if we can get above it, then we do have a path up, but we run the risk of getting sucked back in. So what's going to define this is what customers are doing. Are customers buying the 68.50 calls, nice round number, in the 0 DTE because they like the ISM numbers? Are customers saying down goes Fraser and buying the 67.50 or 6800 E-mini puts, trying to suck us down? That's why you have to watch the flow to be in the know. And so that's the other variable. Trying to give as many variables as I can. And that's it. I've got, it's 9:15, so I'm going to cut it short here. If there's any other questions, good questions. Good questions, Barry. Very good questions. Good, I'm glad. I hope it made, some people, not everything works for everybody. My method of explaining things works great for some. Some people say, what the fuck did he say? I don't know what to do. And that's okay. I wish I could be the universal explainer for everybody, but I can't. So I'm, trying to do the best I can. I'd still be me. Okay, well, that's it. Top of chop. Let's just get our reference points again. Let's see.
All right. Good luck, everybody.
All right, good luck. Yes, I think it's safe if you don't mind taking a little heat, because I think even if we go, down here, 67.50, wherever it is, I don't think we do, but if we did, that we still mean revert back up. This area becomes sticky from above or from below, fake pain in between. Now, if one wanted to, I certainly wouldn't have a problem, quote unquote, with waiting until after the numbers at 10 o'clock. However, the double-edged sword of that is if the numbers suck, how far down do we go? Versus if the numbers are good, the volatility dries up, then you have to sell on the put side kind of closer. So given that conundrum, I don't think the numbers can suck so bad that we're going to break 67.50. And that we still have this magnet here at 68.10 and 6,800 round number. So I would be inclined to sell my puts sooner rather than later. And be willing to sit through some fake pain. Okay, Ricky. All right, everybody. I'm out of here. Hope I answered all your questions. And the call side's trickier, obviously, because we're all the way down and near the bottom of the range. We have 67.50, the close on Friday. Do we end up green on the day? Stranger things have happened. Are we breaking his calls on top? I highly doubt it. And then you just kind of, some days don't give you as clean setups as others. Okay, goodbye, everyone.